There is a lot of uncertainty in the market since people don't know what's gonna happen. Unfortunately, most of the banks have put themselves under a policy, not to speak too much on the Brexit if it goes left or right. So apologies if I'm not going to tell you what we think the outcome will be. But you can see in the press reports all over the uncertainty and how important this question will be for the real estate market. You can experience in the UK a bit of a hesitation. I think quite some people are waiting for the results. Will there be impacts on investment behavior? Will there be impact on the currency? So that's to Brexit. Turkey, pretty interesting developments in that country. You can see that many international investors have made certain experiences in this country, and I think what's happening down there in this country is not truly helping in attracting more and more investments in real estate. At least from what I've seen, you have some international parties who are getting more and more prudent.
I think the first point to make is that currently, and as Sasha has said already, the UK market from a lending perspective is pretty much in a holding pattern, has been for most of this year, and that should not be a surprise, and it's not necessarily altogether linked to the announcement of the referendum in 23rd of June. If you go back to midpoint 2015, that probably marked the highest point in the UK property cycle in terms of transactional volume. And steadily since that midpoint of 2015, we've seen transactions in terms of numbers and value drop away, such that if you compare Q1 16 to Q1 15, you would notice, and these are published numbers by IPD, or MSCI as they call themselves these days, the volume in 2015 Q1 was around about 18 billion GBP, and in Q1 16 that was circa 13 billion. So that's a drop of around about 28 to 30% in terms of market activity quarter to quarter on a comparable year basis. Now that's not entirely attributable to people actually saying, well, with referendum I'm holding off. That's attributable to the activity on the international markets or international capital coming into the UK market. And I think that has decreased to some degree. So if you took the two together, the decrease in international capital and the pause by investors in real estate market, that has led to quite a substantial reduction in activity. There is talk, certainly around the end of March, beginning of April, of referenda clauses being inserted into property contracts, such that if the vote went in a particular way, then the contract could be rescinded. There are talk of some banks saying we will work the loan documentation through and the due diligence, but we won't sign till the 24th of June, depending on the output. So this is quite a sort of pause point in the market for the last 4, maybe 5 months, and probably will go for the next month indeed. If you want to look at how the market is likely to be post-June, so you could take either scenario and imagine that if the lending banks who have been waiting to see what happens find the vote has gone on a Remain basis, then you could expect them to want to make up a lot of lost ground that they didn't achieve in the first 6 months. And that might lead to compression of margins and a more aggressive lending pattern. Conversely, if the decision is to leave the European Union, then you might imagine that the holding pattern could become further entrenched with more uncertainty, waiting to understand how that exit will be planned and ultimately executed. So I think there are two very diverse or polarized effects depending on which way that decision is likely to go.
Yes, Anthony, can I ask a quick question maybe, because I see that you're from UBS Global Asset Management side. So isn't actually this moment before the 23rd of June a very interesting one to get a little bit of extra yield or something? Because of course the banks, they're got a different kind of view. You're coming from the sort of an asset management side. So isn't this exactly the timing which you're looking for? Thank you.
I think that's an extremely interesting point to make, and I think there are some investors who say there is some deterioration in transactional volume that has led in certain instances to yields moving out. So yes, you're absolutely right. There could be opportunities for some investors who have... I'm on the lending side, so I can't comment on the side. The reality is that there are some investors who see opportunity in the market. And I think there has been some instances, not that I've seen any directly, of yields that have softened, and where those investors who are willing to take the initiative in this market could get better opportunities than they may have seen 6 months ago, 9 months ago. So I think your observation is absolutely on the mark.
Yeah, I don't concur entirely with Daniel here on this point about the importance of the vote, is UK, how much is UK part of the EU or not? From my perspective, even though they have their own currency and they have their own Schengen interpretation, they're very much part of the EU. Yeah, if you look at the exports coming from or going into the UK, you have the US, you have France, and Germany. So the economical ties are very tight. What I'm worried about is, the signal, the ripple effects. Yeah, if it goes left or right, you have a lot of extreme movements, political movements in Europe, in the different countries. So you can imagine, if it goes one way, yeah. But this could be again, especially in the media again, what kind of ripple effects it would have in other countries. Yeah, if they exit, you might have discussions in other countries, and that might be a destabilization of Europe. Yeah, I think this is why this vote is so heavily observed by everybody, and we're waiting with big impatience for the result.
If I could just pick up on the point Sasha makes, which I completely agree with, maybe but add a little bit more definition in there. The referendum decision is totally binomial. And by that I mean either a stay or go decision will have very substantial impact in the domestic markets for the UK. Those impacts, if you just look at the movement of international capital into the real estate markets in the UK, if it's a leave decision, it is conceivable. I'm not saying it will be, but it is conceivable. You could imagine that international investors might say, actually, we're not sure about investing in the UK, and we're going to start diverting capital into mainland Europe. Conversely, if it's a stay decision, that flight of capital that might have gone into Europe might return to the UK. And that alone is a really significant potential shift in the international capital flows for the real estate markets, not just for the UK, but all of the European commercial real estate markets. So I think it's really, really difficult to separate the consequence of a single country's decision from the impact it will have on a truly pan-European basis. And I think it's very easy to underestimate some of those impacts.
And yeah, go ahead, Sonia.
Maybe, from my perspective of the legals, I think I really can support what you said, Anthony. We should resist the temptation to fall into a pattern, regardless what the result is, and do the negative one. Britain is leaving. You can have the temptation that you put up even more regulatory barriers on the continent, because you put it simply, then you have an axis, let's say, Germany and France being countries who eventually have a little bit of a taste of aiming and leaning towards more regulation, if compared to, if you want to make the argument, a more freedom and say free trade approach, let's say UK. I think in the way we would lend, there is a danger that if one way or the other decision is taken, that we all should resist in claiming that we need more, let's say, separation on the regulatory level, which I can see happening as a result of the, let's say, political, let's say, well, sentiments after the vote.